Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right. Yes, indeed, everybody. We are continuing on Bloomberg Businessweek Daily. We are live at Bloomberg Philanthropies Global Forum here at the Plaza in New York City. So we've stepped out of studio to really tap into some of the leaders that are in town. They're talking about major issues, AI, climate change, infrastructure, so much going on. And I feel like everybody's watching kind of the tech race, which I think about the story that just crossed about maybe Intel and Apple are talking. Maybe Apple makes an investment in Intel. We're going to get the lowdown on that in just a moment.
Yeah, we are. In the meantime, we got a great program coming up over the next hour right here on Bloomberg Businessweek Daily. We're going to speak with the CEO of the New York Climate Exchange. He's standing by. Also, Mahmoud Mohildin, UN climate change high-level champion for COP27, and the CEO of Canada's Bilateral Development Finance Institution is going to be joining us in just a few minutes.
Our global view and perspective continues in just a moment. But first up, everybody's watching what's going on with global technology companies, and we are watching so much in terms of what's going on with Intel. The stock shooting up in the last 15, 20 minutes. This on a headline that crossed that Intel has approached Apple about securing an investment in Intel. This is according to people familiar with the matter, part of an effort to really bolster a business that is now partially owned by the U.S. government. Don't forget that.
And you, Carol.
Yes.
You're a taxpayer.
You, me,
okay.
We all own a piece of Intel. Ryan Gould and Leanna Baker of Bloomberg News reporting this out. Ryan is Bloomberg News deals reporter. He's back at the Bloomberg Interactive Broker Studio at Bloomberg headquarters in New York City. Ryan, what's going on and what do we know?
Yeah, I think it's great to be with you guys, first of all. But I think, the news of the day is that we can report that Intel has approached Apple about securing a potential investment in the chipmaker. This obviously comes on the back of both the US government investing in Intel directly, one of its largest shareholders, and also would potentially follow a $5 billion investment from both Nvidia and a $2 billion investment from SoftBank. I guess one way to put this all together is, Intel is on the comeback. And exactly what that comeback looks like, well, maybe it's a little too early to tell, but they're definitely being proactive about it.
A line in the piece from you and Leanna really sticks out. It's the fact that a longtime Intel customer, Apple, was, but it switched to in-house processors in the past 5 years. It's unlikely that Apple would switch back to Intel processors in its devices. What's in this for Apple?
Yeah, I feel like a 3-year-old or 4-year-old. Why? Why are they doing this?
Well, why would they? They're not necessarily doing it. Why would Apple do this?
I think, Tim, you mentioned that line, but I think one of the other lines that is worth drawing attention to in the story is that Tim Cook appeared at the White House not so long ago, just a few months ago actually, and stood in front of Donald Trump and pledged $600 billion of investment in the US over the course of a 6-year period. I mean, that's no sort of small amount of money. I mean, when you think about their announcement that Apple made with regard to the Corning, longtime Apple glass supplier, for $2.5 billion, I mean, you're kind of looking at Apple and thinking, okay, this is a company, this is Tim Cook wanting to be on the right side of Donald Trump. And, what does that look like for Intel? Well, maybe, think about things like tariffs, think about things like onshoring manufacturing, think about things like what does it mean to be made in the USA?
So is this more an Apple story or an Intel story? Or a little bit of both, just to wrap up here?
I think this is more of an Intel story for sure. I mean, to be sure, Apple doesn't need Intel. It's the other way around. And so this is definitely an Intel story. But I think, to underline all of this, this is about Intel being proactive. And, when you've got the US government as one of your largest shareholders, I think that's definitely a message that you would want to convey to people watching on the outside that, now's the time to get serious about our future.
All right. Good stuff. There's so much in this story. It is a Bloomberg exclusive, so we highly recommend you check it out on the Bloomberg terminal and at Bloomberg.com. Ryan Gould joining us, Bloomberg News Deals reporter back there at Bloomberg headquarters in New York City.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Carol Massar, Tim Stanovic live here at the Bloomberg Global Business Forum at the Plaza in New York City. Well, if you want to know what global consumers are up to or what massive global companies are really thinking about when it comes to the macro environment, what are their priorities, then keeping an eye on Walmart is definitely a must-do. It is the world's largest retailer. It was among the retailers that recently raised their forecast. That happened over the summer. And a member of the company's C-suite is joining us, Tim, right here at the forum.
Yeah, here at the Bloomberg Global Business Forum, pleased to have Chris Nicholas with us, President and CEO of Sam's Club. It is Walmart's membership-only retail warehouse club, mostly with clubs here in the U.S., but also overseas clubs in Mexico, China, and Brazil. Former COO of Walmart U.S., previously CFO across Walmart U.S. and Walmart International.
Which
Welcome.
means you've seen everything.
I've tried.
How are you?
I'm doing great. Really excited to be here.
How are we doing? And by we, I mean the American consumer. You've got such a great view on what happens across the country. How are we doing?
Yeah, I mean, what we're seeing at Sam's Club is consumers that are consistent and rational. I've been in retail for more than 30 years now, and I've never known a time when people don't love great items at great prices. And as long as you're giving people that, we're finding consumers really, rational and consistent.
What is their behavior, though, right
Yeah.
now? Because that's something Carol and I were talking a lot about today. And, the whole idea of, are they buying what they typically buy? Are they buying what they buy at a certain point in an economic cycle? Are they trading up? Are they trading down? Mm-hmm. What are they doing in your stores?
Yeah, it's interesting. Consistent would be the word I'd use. People are still buying general merchandise from us. I mean, we talked in our last quarter the results about general merchandise sales having another quarter of positive comp. But what's really interesting within that is that the units are moving faster than the items, which means that, we're still giving them great value. And I think people are really moving to appreciate when they're getting good value. The club warehouse model is made for times like these, I would say. It's a good time to be in the club model. In our clubs, we've only got 4,000 items. And the way that the club model works, just to level setters, is our job is to make almost nothing on what we sell. We just about break even, and we make all our money from membership. So the lower you can operate in terms of costs, the lower you can keep prices. And when that happens, people are more loyal. They renew more often, and you get more members. So we're in this really special moment right now where people love the great value that we've got, and they love the great items that we've got too.
I want to cross that with what we just heard from Fed Chairman Jay Powell, Chris, last week in terms of the decision, and kind of basically saying the Fed's not in a great place. Either way, there's some risks to the employment picture. There are concerns still about inflation. So there's kind of risks to both sides of the equation, and concerned about monetary policy that it's hard to do right now in this environment. So that to me sounds uncertain, unsure, but it doesn't sound like you're saying any of that.
Look, the club, here's the thing. We have this position where there's only, between us and our main competitors in the club model in particular, we're only 6.5% of the total retail market. And we would definitely, from a club point of view, our consumers definitely skew sort of more wealthy, bigger basket sizes. And but we do serve everybody. And we don't see a great delta between different income cohorts.
You don't?
No.
All right.
Nor generations.
Well, what about, are you, when you think about kind of the environment, especially when it comes into tariffs, in terms of pricing, how do you kind of figure out where you can maybe raise prices, where you can't?
It's such a great question. And again, not to sort of pivot, but the one of the powers of the club model is because you've only got 4,000 items in the club. Those items are curated.
Yeah.
And our merchants, they are true professionals that many of them have been in their jobs decades, and they understand the value chain from end to end better than anybody. And so they get the ability to choose what's in the club, but they also get the ability to work through where the inefficiencies are in the supply chain. They've got deep relationships with the suppliers, so you work through where the opportunities are between the suppliers too. So I'll give you an example. Our roses that we buy from Ecuador. the costs went up because the tariff environment changed, and so our merchants worked through with the supplier, like, what could we do? So we moved them in different ways, so we have less packaging. We wrap them in the US now instead of where we used to wrap them, and so you do things like that help you to manage the input costs. That means you don't have to pass it on to the consumer, and our job is to work through how little you pass through, and you work through how late you do it. So we'd always like to be last up, but we have the ultimate opportunity in the club channel, and that is that we have choice because we don't have to sell everything. So the curation actually is a superpower for us.
Does that mean you haven't raised prices on anything?
No, we see, look, here's the thing. There are certain things that where prices move all of the time anyway.
Right, I
so
get that.
Produce would be a good example of that. And there are some
strictly
things
tariff related.
Yeah, what I would say to you is that if I think about general merchandise, which is like all of the electronics and apparel and all of those things.
The stuff that I have way too much in my home.
There's never enough.
Yes, there is.
You're talking to guys who sell stuff, Carol.
Never enough.
I know. But anyway.
Please buy more.
But in terms of tariffs, particularly
so,
putting pressure on pricing.
Yeah, so what we see is, in terms of what people are buying, I think I mentioned this, but the growth in the units that we've had is outpacing our comps in general merchandise. So if you think about like over the last few years, you had like packaged goods through COVID became more expensive, and they never really came down. Whereas general merchandise, we had the supply chain disruption. You remember that, and the general merchandise inflated, and then it deflated rapidly as it was after all of the supply chain disruptions disappeared. And at the end of last quarter, we were still in a period of slight deflation in general merchandise. So prices move all of the time. Our job and our merchants' job is to make sure that we give people access to the price points they want and the value that they want. I think maybe it's worth mentioning, but in Sam's Club, like, we're 25% cheaper than retail in general. So as we resist putting prices up because that's in our DNA, we're always going to be more price competitive than everybody else.
So then you haven't raised any prices related to tariffs.
We will be the last people to put prices up, and some prices have gone up, but in the mix, I'm telling you. So for sure, I mean, we have input price changes in some items, and some's come through already, and some is still to come through. But I would tell you that, like, our job is not to lead with putting prices up, and all of our sales growth in Sam's Club is through unit growth, not inflation.
Okay, cool.
I'm wondering what you're hearing from your team who's out there talking to the producers, the American producers of things we grow, produce, beef as well. We had a Bloomberg News story last week about farmers, and I'm told that the Trump administration policies are taking on farmers right now. And immigration, just one of them. Tariffs on soybeans are another one as a result of less interest from China and Chinese buyers. What are you hearing, though, on the immigration front? Because in some cases, 40% of migrant workers are from outside. 40% of farm workers, rather, are migrant workers. So they're coming from outside the U.S., and that's a challenge for farmers to actually find those employees right now. What are you hearing from them?
Yeah, I don't have anything to add or to offer on that topic. I would tell you that we have brilliant farmer partners. We understand the value chain really well. And we have no in-stock issues or cost price issues.
So have they raised prices at all on American produce?
You'd have to ask somebody else about the through line on like employment and price increases. I think you probably speak to lots of people that are better informed than I am.
What about from produce that comes outside of the United States? I mean, we can't do everything here. We can't grow bananas. We can't grow avocados. Yeah. Tomatoes, when they're out of season, come from outside of the U.S. Yeah. What does that look like?
Yeah, I mean, what does
like the increase in costs associated with tariffs? Because those will be, or those are tariffed already. I mean, beef that comes from Brazil, 40% tariffs, for example.
Yeah, I mean, we definitely over-index on U.S. beef. The vast majority of what we buy is U.S. The vast majority, and so, but we have choices about where we buy from. This is the benefit of being this curated, limited assortment retailer, is that we get the choices to buy from the places that give the consumers great value and great quality, which we're never going to relent on. But, we buy items, we buy avocados, as you said. from abroad, and many other items, tomatoes when it's out of season, and the quality and the value. We'll never relent on the quality, but if the input costs increase, then the inputs costs will increase. But there's in produce there are so many variables, produce and beef.
Right.
I mean, that there are so many variables that pushes the costs down as well as up. So I think it's a super complex situation, and I think that our farmers are some of the best in the world, and I think that our merchants know how to work with the farmers. The best thing you can do for those farmers is to give them great forecasts, allow them to grow to those forecasts, and give them good prices that allow them to run sustainable business models, and we do a really good job of that.
Chris, you guys in retail, I'm sure we're, even late to talk about the holiday season and the upcoming holiday season. When you think about assortment and what you want to have in inventory for consumers, how's it looking for this year? Is it going to be a lot different from last year? Are the supply chains all there to get what you need and what you want for your consumers? Yeah,
that's not an issue. We don't see any issues with supply chain management in that way. We, Sam's Club in particular, we get really early. So you go to a Sam's Club now, which hopefully, please do. You'll see it's full of Christmas.
I know. It drives me a little crazy.
Yeah. I mean, I understand.
Why is it so early? I mean, Halloween hasn't even happened.
Yeah. Well, in the club channel, people like to be prepared.
I know. Yeah.
So we get into a season early and then we exit early. And that's kind of scarcity is part of the value that we create. And so, So we're not worried about it from a Sam's Club point of view. But the thing I would say is that people just love to celebrate. They love to buy. They love the seasons. And so I think you'll find that certainly at Sam's Club, people, whether it's the general merchandise they buy pre-Thanksgiving and Christmas or the food that they buy for the season, as long as you're giving them great value, they're going to come to you. And people will find a way to celebrate.
One of the things we love about the Global Business Forum is that we tackle everything: climate change, workforce, employment, economics, politics. As a leader who's been at a company for a long time, and I'm sure looking at everything that's going on, what's top of mind for you? And an environment where there's pushback against certain initiatives, there's a lot of political things going on, geopolitics. I'm just curious. In running what you guys do, and I know you're kind of a well-oiled machine in many ways, but I'm just curious.
Yeah, I think, in an environment of change, and by the way, change is a constant and you've got to love it. Then I've always found that the best thing to do is to focus on what you can control. And what you can control is the culture you create as a business, how you work with and treat your customers and your members, the experiences that you create. A great example is the e-commerce business. We've just launched express delivery from our clubs, and people love it, and they're opting in.
Does the price change with delivery?
No, we have price parity. We have price parity. So others don't. We do. So we have price parity between clubs and online. We think that's really important from a trust point of view, and people are thanking us for it. Our delivery from club, food and non-food, is growing at triple digits right now. Wow. So I think focus on what you can control. Start with being great people. Start with being a great business. Look after your associates so they can look after our members. And then, that generally will lead to the right outcomes.
So on that, we'll hear from one of your big competitors tomorrow. Costco reports earnings tomorrow. How do you make sure that people join Sam's Club and not Costco?
Yeah, look, Costco's a great competitor. We think that we're great too, and we're doing a lot of good things. What I would tell you is this.
Because you have an aggressive plan in terms of expansion.
Yeah, we're excited about it.
I know.
Yeah, we're really excited about that plan. Actually, the club channel in general is a relatively small channel. There's huge upside for the whole of the club channel. And I would tell you this: good competition makes you better. And I've never been afraid of good competition.
What about AI? And how you guys are working?
Are you afraid of AI?
AI is a big topic everywhere now, isn't it? Here's the thing: we're excited about AI as a company, and I am personally too. I think this idea of...
Are you guys using it a lot?
A lot. We've been using it for a long time, honestly, but the generative AI and then the agentic AI that's coming through too is really exciting. It's exciting for our members and for our associates. What we do, we pivot to growth. How does this help us move faster, do more for our associates and our members, how do we find different routes to market? So that's exciting. Of course, we also look at like, how do you find opportunities to take time out of product launches and all of those kind of things so that you're a better business. The one thing that you may have seen is we also believe that the opportunity to empower people with the use of AI, but with an enterprise, but with enterprise data, is really exciting. So whether it's in the office, or recently we made an announcement a couple of weeks ago at our holiday meeting, where we gave our frontline management access to OpenAI, to ChatGPT, and which they can use to just go faster and do more. And that's really exciting. Yeah,
it's kind of amazing. We're all kind of finding our way through it. Chris, thank you so much.
Thank you for having me. I appreciate it. And good luck.
Good luck. Thank you as well. Chris Nicholas, he's the president and CEO of Sam's Club.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Carol Masser, Tim Stanovic live here at the Plaza, the Bloomberg Global Business Forum. Leaders. And one of the big topics this week that we've seen as world leaders are in town, and also as it's Climate NYC, is everything and anything to do with artificial intelligence.
I mean, we can't kind of stay away from headlines here every single day. Just today, Microsoft partnering with OpenAI rival Anthropic to help power its workplace AI assistant. Anthropic, founded by former OpenAI employees, Carol, it's one of the largest competitors to OpenAI, a key player in the industry.
Yeah, just coming on the heels of one of the big stories that we covered this week, Nvidia announcing it will invest as much as $100 billion in OpenAI to help with that build out of data centers. So there's a lot going on. When it comes to AI, it's all about partnerships, and we have a great guest to talk about that. Lane Dilg is former head of strategic partnerships, global affairs at OpenAI. She's had a career in law, politics. She served as senior counsel to then Senator Kamala Harris, and she's also worked at the Department of Justice. I'm rushing, but you have like this incredible public-private background. So when you think about AI, I don't know. How do you make sense of it just feels frenetic, the amount of money, the amount of activity, the amount of headlines that come every day?
Yes, there obviously is so much happening, so many big deals in the news, and those big deals in the news do have real life implications for all of us. So incredible, as you mentioned, to see the Nvidia and OpenAI deal showing that Nvidia will provide chips to OpenAI up to 10 gigawatts and also make an investment, $100 billion, obviously shoring up OpenAI's credit and providing a real runway for OpenAI. Those kinds of deals we are seeing almost weekly right now. You mentioned Microsoft and Anthropic as well. So a very, very competitive landscape and a landscape that is moving extremely quickly.
It's kind of funny to hear about Microsoft partnering with Anthropic, given that Microsoft is a huge investor in OpenAI. What do you make of that? Like, what's the world that we're living in when you have these strange bedfellows?
Yes, I think everyone is watching sort of all of these different pieces. From an adoption perspective, people are looking at how many different companies will individual companies work with. So do you want to work with one AI model? Do you want to, or one AI model provider? Do you want to work with many? Microsoft also has in-house AI. Yeah. They have the partnership with OpenAI, and now you see them with Anthropic.
Well, can you... We've had some folks come on our program and say, okay, there's been so much funding, there's been so much money chasing these companies. There are also those people who say, we're kind of just going to wait until the dust settles because we think there could be this commodity issue when it comes to LLMs. What separates one LLM from another? What separates Claude from ChatGPT? And I fully... We're asking somebody who was at OpenAI. So
yes,
that's where this question is coming from.
A great question, though, because obviously now I use all of them to try to stay up to date on where everyone is. And I also speak with the different companies about sort of what their trajectory will be going forward. I do think the models are somewhat different just for users. They provide responses a little bit differently. They're friendly in different ways. They're useful in different ways. And so there's some personal preference. I do think that we will start to see differentiation in areas like material science, chemistry, biology, as people really move into these more specific domains where different model providers lean in, who they work with and how, will become important in terms of what you can do to solve problems with the technology. I think the other piece, as you see with the Nvidia OpenAI deal, we often say infrastructure is destiny. It is true that there is also this massive race for compute, and that is because to continue the research and development to continue to make the progress, you need compute, and compute requires a lot of energy. So we don't know yet whether there will be differentiation there or not, but everyone racing to make sure they have the compute they need to continue development.
Lane, you run your own advisory firm, and you're dealing with kind of innovation and partnerships, right, and working with other companies. But I want to go back to what Tim said. I mean, I think there was, when the Nvidia deal came out, that there was concerns that it was a sign of a bubble, that it's Nvidia partnering with OpenAI. Obviously, it's the company ChatGPT so identified when it comes to AI at this point, but this idea that Nvidia needs a marketplace to keep buying its chips. So I'm just curious. I mean, at some point, I don't know. What are you hearing from companies as you talk to them? Are they a little cautious at all? Is there any nervousness about this incredible spend and this incredible build out?
Yes, a great question. Obviously, financial experts around the world asking many of these questions. I think, we previously thought that Nvidia may not be able to supply enough. So interesting to now hear people say, well, they are, trying to find a consumer.
A home for their chips, it feels like, right? Yeah.
So I think that conversation happening on both sides. My own personal view is that we are not yet anywhere close to maxing out the demand for compute and chips. And when we are, then you may actually see that model development is stalling or something else. But I just don't think we're there right now.
I am curious, when you were at OpenAI, and we know you left a few months ago, and now you have your own advisory firm, is the phone ringing off the hook of people saying, help me, I need to find this, and what are they looking for?
Yes, so it is true that people are looking for lots of answers. They're looking for answers to the macroeconomic questions. They're looking for answers to help them guide investments. But then teachers and healthcare providers are looking at, what is the potential? How do I take care of my workforce and also take care of those I serve at the same time? What is the pace of adoption? I'm excited to be here today with Bloomberg Philanthropies working on the Mayor's Challenge, which is a competition they run around the world for mayoral innovation for city services. And so many people in that space saying, where are the opportunities for innovation? And we're seeing such interesting proposals there as well.
I just want to say, I actually had a meeting with a giant company. I'm not going to say who it was. And
we've heard of them.
Everybody's heard of them. But it was like we were talking about, they were asking me about how I'm using AI. I was asking them, and it's like we're all kind of fumbling our way through. And we have courses that have come up at Bloomberg to kind of help us figure our way through. This company, they're just kind of like somebody figures something out and they do a kind of a show and tell. But it's interesting how we're trying to find our way through this.
Yes, I've heard two CEOs at the Frontier Labs really say the pace of scientific progress on the AI side is much faster than the pace of implementation and adoption. It's hard. These are large institutions with lots of people. You have to actually figure out what is the right way for your company, for your school, for your business, and that takes some time.
I use ChatGPT all the time personally. I use it at work too. We have the paid version at work, but I have the free version on my phone. And when it tells me I can't use it anymore, I just go over and use Claude. How do you prevent that? How do you get me to pay for it? Like, how do you monetize all the free users when so much compute is being used?
Yeah, I think, same with any product in a certain way. You want yours to be the go-to. You want yours to be the most useful, the one that you turn to solve the problems that are most important to you. And I think that companies are competing in that, and we'll see fits and starts. But you get accustomed to one product or another.
So, will we be paying for it?
Well, or is there going to be advertising?
Yeah.
So I think, right now you can pay for different levels of access. I think that is meaningful, both for individuals and for businesses. I use the paid accounts across all of the different companies, which may seem crazy, but I want to see where the capability really is. So I do think that is the monetization that you're seeing primarily.
And I'm not a tax professional, but that's a business expense, I would imagine. So but talk to your accountant about that.
Yes. Okay. Taking notes.
Yeah,
I am curious about, we mentioned that you were senior counsel to Kamala Harris when she was senator.
I have been senior counsel to a senator, but most recently I was senior advisor in the Department of Energy.
Oh, I'm so sorry. Yes. That was the notes I had. So
yes.
I'm so sorry. I do think, though, about the intersection of technology and politics. Yeah. And I feel like every decision is made with a careful glance at the White House.
Yep.
So talk to me about that and how that might, kind of impact the deals that are done and how they're done?
Yes, absolutely. I think you see a lot of that in the infrastructure space. So if you look at the models, they, as we talked about, require compute, but compute also requires energy. And as we look at competition between the United States and China, I think people feel really good about our talent. They feel really good about our workforce. They feel really good about our innovation. But we do need to get more energy on the grid, and we need to do that fast. And so I think you see this all of the above approach, but also disagreement over what is that all of the above approach? How does it work? Do things need to be grid connected or not? And most importantly, how do we make sure that consumers have the electricity they need at the prices they need while we power all of this AI?
Well, is it ultimately going to be everybody, especially the hyperscalers, probably doing their own energy development on site, that kind of thing? Or
I think you'll see a mix. Just like you see a mix in the financial deals, I think you'll see a mix both to hedge risk, but also because it'll be opportunistic. We need the energy as fast as we can get it.
Hey, just want to end with what this does to the American workforce, the global workforce. Dario Amodei over at Anthropic has been really outspoken about how this could just decimate white-collar jobs. You agree?
So I think there was a conference in San Francisco that people are watching just last week about what the different scenarios are. I think we don't know the answers yet. And so from a policy perspective, we need to be planning for multiple scenarios. It's critically important that we understand both the data of how are jobs moving, where are the transitions happening, and also look at the social safety nets and other things to make sure that if there is dislocation, we're doing the reskilling, we're doing the training to get people into a place that is productive.
You've seen the tech up close. You know what it can do. What keeps you up at night?
What keeps me up at night is, as always, it's the humans. It's our human potential. It's our ability to step into this technology. And it's also what we can do with it for good or for ill. And I think that's the space where I'd like to see the policy focused.
Are you worried about the bad side of AI?
I'm worried about humans using AI for bad purposes is what I worry about more than the doomers who are more concerned about what we would call alignment issues. I think the science on alignment is pretty strong and will continue to be strong, and people will be alarmed if it's not. But the question of what can you do with the technology is a hard one. We are about to all get more powerful.
Yeah, it's kind of interesting. Need to leave there. I feel like we could talk a lot more about this, and we will probably in the future. I hope you can come back.
Yes.
Lane, thank you so much. Lane Dilg, she's former head of strategic partnerships and global affairs over at OpenAI.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Carol Massar along with Tim Stenovic. We are live here at Bloomberg Philanthropies Global Forum. We're going to continue with some great conversations from this event.
Yeah, the event brings together heads of state, business leaders to address the world's most urgent challenges and opportunities. Among those challenges and opportunities is sustainable economic development. And that's where Lori Kerr comes in. She's the Chief Executive Officer of FinDev Canada. It's Canada's bilateral development finance institution. She joins us on set here at the Plaza Hotel. How are you?
I'm great. It's really great to be here. Thanks so much for having me.
It's good to have you here. I feel like our conversation this year would be a lot different than our conversation last year if we were to have that. We're going to get to that in a minute. You invest in Africa, Latin America, the Caribbean, in a world that many would argue is turning inward. How do you convince Canadians that what you're doing is in their best interest?
Well, I mean, if I quote some of the recent speakings of our own Prime Minister, he certainly recognizes that when developing countries prosper, Canada prospers as well. It's a time to really lean into global partnerships to build resilience and global economic growth.
How do you prioritize how to do that? Because I'm sure there's a lot of folks saying, we need help.
Absolutely. And quite honestly, like the demand is limitless for what FinDev Canada offers and other bilateral development finance institutions. So how we approach our financing and investment decisions is, of course, we have to have commercial sustainability. That's what we're going to. We want to have vibrant markets. And we also look through 3 impact lenses. We have 3 impact lenses through which we work that informs all of our financing and investment decisions: climate and nature action, gender equality, and local market development.
Has to check on all of those in order for it to happen, or no?
Not all of them, because different types of investments in financing opportunities will address one or more of them. We obviously, look to try and have positive contribution across each of those, but not everything ticks every box, so to speak.
I feel like in this administration, in the environment that we're in the United States, those boxes would not exist under this current administration. How do you think about that?
Well, it's a real wonderful opportunity for Canada to show global leadership. And again, when developing countries prosper, Canada prospers and the world prospers. So it's an opportunity for us to continue with looking at having impact in the markets that we serve.
So with the U.S. pulling back on foreign aid, with the U.S. dismantling USAID, which certainly is controversial here in this country, as I'm sure you're aware, does it mean more of an opportunity for Canada? Or net, does it hurt Canada and does it hurt the world in the long run?
Well, I think certainly there's a lot of hugely negative impacts from a huge amount of the aid bathtub, sort of a plug being pulled, so to speak. But we have to look at that as an opportunity, right? As I mentioned when we just started, that demand for development finance is steep, but now it's really infinite because the U.S. has traditionally played such a very big role in development aid and in development finance. So in a way, it's a tremendous opportunity for countries like Canada and like-minded countries to lean in.
Laura, I'm always interested in the specifics of things. So talk to us about some things where there have been investments made and what's the outcome.
Yeah, absolutely. So let me give you one example. So we were established in 2018, so we're the youngest bilateral development finance institution. And one of our very first investments is in a company called Climate Investor One, and they're supporting energy transition across Africa, across Asia, and across Latin America. So in 2018, we made a $20 million equity investment. And now they've been able to raise $800 million. 80% of that is dispersed across 16 renewable energy projects. 6 of them are already in operation. So that's renewable energy on grids. That's diversification of energy matrices. That's supporting local economic growth. So really having a positive impact. So they've been a really great example of how using public resources through development finance can really mobilize private capital and show that commercial viability and positive impact on climate can go hand in hand.
We have been speaking about the potential economic effects of a pullback in aid by the United States and other countries filling that gap. But as we just heard just moments ago, we were speaking with Mahmoud Mohildin, who basically said the era of developing countries being helped by other countries is over in his view. Do you agree with him?
Interesting. So what I would say, it's definitely a repositioning, right? I think for the last, 15, 20 years, it's been an era. And the era is changing for sure. So there's disruption in the system. Again, I do think that there are many countries that are still looking to play their part, believe that there is a role, like Canada believes there is a role for Canada to play in development. So it's a reordering, it's a reawakening, and it's much more about partnership, I think, going forward.
Do you think about it from an immigration perspective at all? The idea that if you are able to improve conditions in other countries, the people who live in those countries will not feel forced migration?
Absolutely. I think, Canada is differently situated than many of our European friends and partners in terms of the immigration issue. But certainly, one of the value added of supporting local market growth and local market development through the private sector is providing jobs. When you provide jobs, you provide incomes. When you provide incomes, you have a growing middle class. When you have a growing middle class, you actually provide export opportunities for countries like Canada. When you provide good jobs, people are happy to stay at home and work and thrive in those local economies. So it's a reinforcing benefit, let's say, of supporting emerging markets.
What's been the biggest impact on your world as a result of what I would say is a conflicted relationship between the U.S. and Canada now, which is kind of amazing to kind of get your head around it. Anybody who's, studied trade or history, who'd have thunk? But this is where we are a little bit today. But what has been the impact on your world because of it?
Yeah, so in the development finance world, it's been a huge disruption. I mean, the U.S. has been such an enormous player in development finance, as I said earlier. So we're all having to reposition ourselves. It's providing a lot more opportunity and an impetus, really, for collaboration amongst the DFI community. So the bilateral DFIs, we're a humble, but we're really a mighty bunch, and we really need to be supercharged. We co-finance and we co-invest as a matter of course. We're, again, a very collegial.
Well, who else is stepping up with you and you feel like really kind of, all right, so if the U.S. isn't going to be so active in it, what other, country or so on and so forth that are working more closely with you?
Yeah, so we work a lot with, the bilaterals. So, for example, with Proparco in France, with British International Invest in the UK, with FMO in the Netherlands, with DEG in Germany. So, I mean, there's a number of the European development finance institutions that we work with. We also do co-finance with the IFC. And in fact, just this week, we're really happy to be closing on $125 million worth of transactions to two banks in Central America. Banco Industrial in Guatemala. So we're providing a $75 million loan. Guatemala is one of the most climate vulnerable countries in Central America. Use of proceeds entirely for climate finance. So climate smart agriculture and green buildings. And then the other transaction is $50 million to Banco del País in Honduras. And that's one of the poorest countries in Central America. There we're also supporting climate finance, renewable energy, water and sanitation, as well as small and medium-sized enterprises, micro and small and medium-sized enterprises, and women-owned and women-led micro and small and medium-sized enterprises.
Because, I always think about all the micro-lending and so on and so forth that you do for women, right? And the impact that it has on a family in particular.
How do you make sure that the money is used efficiently? And, there were so many stories, at least with U.S. money that went out, where you'd find that, grants that went to certain organizations weren't necessarily used in the most efficient way or even used for what they were supposed to be used for. How do you make sure that there's not sort of a
fraud?
Yeah, I didn't want to say fraud. I just want to say there's somebody who sort of takes more than they're supposed to.
Sure. So, I mean, we're in the commercial financing business, right? We provide financing and investment. We have a higher risk appetite than commercial capital. But, again, we want to support commercially viable solutions. Part of the impact framework that we as development finance institutions bring to the fore is sort of the rigor and vigor around the impact and the reporting. So, we do go in and we have the measures and the metrics to actually be on the ground and make sure that we're getting the information back, the data back. We go out and verify that. So again, it's the depth around measurement, impact, evaluation, and reporting that makes us thrive and allows us to actually have impacts in the markets that we serve.
All right. I think we have to leave it there, unfortunately. Excellent. Did we run out of time?
We ran out of time.
That was fast. Lori, thank you so much. Good luck.
Thank you. Thank you so much. Have a great afternoon.
Lori Kirsch, she's Chief Executive Officer of FinDev Canada, joining us right here at the Bloomberg Philanthropies Global Forum.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.